All right, we're back and we're here for the March real estate update for Spokane area. And talk some mortgage, talk real estate, and just kind of the things that are affecting our market right now and rates in general. And today, and I always mess up this place. Is it Hatch and Beaker?
Yes.
Oh yeah, it's on my cup. We're at Hatch Beaker and Burr, which is a little coffee shop off of Main. Really good. One of my favorite meeting spots.
This is a good spot.
Yeah, yeah. So, looking at real estate, like my general, like if I had to describe the market right now, is it may not feel like it's stable, but it's actually pretty stable. We're not seeing a ton of price movement. As a matter of fact, like if you look at the trend in price movement, we're starting to see the highs kind of level out, and we're starting to see the lows get higher. So we got this like plateau on top and an angle up, which means like it's kind of compressing a little bit as far as price movement. And so, I think we'll either see that plateau or, my opinion is like we see it break to the upside as far as appreciation is concerned and actual change
Yeah,
in
I would
median
agree
price.
with that. Yeah.
So good sales activity. I mean, to start the year, we had 406 closed sales in January. In March, we had 554. So, the closed sales trend is going in a good direction. We're off a little bit year over year by about 6%, but not bad overall.
And
So,
April pending, are they up a little bit? Sorry.
yeah, no,
Moved
you're
you
good.
forward?
You're good. I mean, just read my mind. So, I mean, so to start the year, and obviously like seasonality, I think is starting to become a little bit more of a player in our market. So January, we had 580 new pending offers. March to finish off, we had 835, which is up 15% year over year from March of 25. So, but all of these, like if you look at all of these trends, they're all trading in the same pattern. Like they're all kind of plateauing, at a certain point and then like trending upwards for the lows. So I think overall, like moving in a good direction as far as the market is concerned. So, yep.
Well, that's good. I mean, as we started this a month ago, the conflict, the war, whatever in Iran was just starting, and we had talked about how an increase in oil prices could move interest rates up, and that has happened over the last month. To be honest with you, I think rates probably could be higher, considering that oil prices are up, 33% over the last month. But there's some safety trade in which some people who don't normally invest in bonds are investing in bonds to try to move their money out of stocks just for uneasiness. We started we started March with interest rates, firmly with the 5 in front of them, and now we're probably back into the low 6s. So, as an interest rate standpoint, that's where we're at. They haven't moved as much as one might think. Although with the inflation of oil prices and some other things that are happening in agriculture, the Federal Reserve Bank lowering interest rates this year is probably off the table for now, or at least not until the end of 2026.
Yeah, so the risk off trade that you're talking about is people are moving from riskier trade assets like oil, gold, stocks, and they're going into more of what's considered safety assets, so bonds. And so what happens when you put more money into the bond, the price of the bond goes up, but the yield goes down. So the more demand there is for 10-year treasuries, mortgage-backed securities, that's actually really balancing out. Like you said, oil's up 33%, interest rates are up a bit, but honestly, at the end of the day, like not terrible.
Yeah,
Not terrible.
Well, in the same token, if you can buy a U.S. Treasury today at 4% or 4.1, where we're at today, that's a guaranteed 4.1% return on your money. And when you can invest in the stock market, you can make 10%. That's not a very good trade. But if you're concerned about the stock market making a correction or lowering, 4.1% guaranteed return is better than a 5% loss.
Yeah, so if you look at the environment of rates are higher, the offset to that is like we've seen more inventory come onto the market. We're up 20% year over year as far as inventory on the market, new listings and listings that are active without an offer. So when you look at like this supply and demand kind of deal and how it affects rates, like we have supply that's outpacing buyer demand right now, which is keeping prices or price appreciation stable. And then when you look at the risk off trade, that's keeping rates stable. So there is some uncertainty, with the war and some of those things that are going on. However, if you look at like the fundamental of real estate, it's fairly stable. I mean, there's not a ton of movement, you know, and
Well, yeah, and for sure. And it seems like a lot of the people that are buying homes now are first-time home buyers. And if you're using the Washington State Housing Finance Commission down payment assistance, those rates have been unchanged for the last month. So they're exactly the same. You're getting the same deal you would have gotten at the beginning of the year.
yeah, you know, and I'd kind of look back. I mean, you know, real estate. If you look at real estate over the last 100 years, there's been 7 years out of 100, actually 100 plus, where we've seen a double-digit decline in the market itself. So you know, like when you look at like higher inflation, you look at the war, you look at, you know, jobs data, all this stuff that starts to make you feel a little uneasy. Real estate as an asset class is a really incredible and incredibly stable asset class. Like during those times of, I mean, Desert Storm, which was early 90s, real estate was pretty flat. You look at 2001, up 6%. Really the only like real estate related crash that we saw was 2008, 2009.
And fundamentally, one of the things that people don't talk about, they talk about all the mortgages and things that people were doing, is that at the time we had outbuilt, that we had more housing than the country needed.
It's always an oversupply issue.
Right, but right now we don't. We are still
No.
undersupplied. I have not found any article that tell you that we have enough housing.
No, I mean, across the country, I think it's something like 3.5 or 4 million homes that we need just to pace like demand. I mean, new housing starts are decent, but they're nowhere near where it needs to be to just get back to where we should be. So we still have a supply deficit and decent demand.
Yeah, and I think that's going to keep housing prices stable or
Yeah.
increasing for that matter.
Yep. So awesome. As always, we can be reached at SpokaneHomeGuy.com or 509-990-SOUL.
We
And
can
if
be
you
reached-
need money.
We can be reached at chimneyrockmortgage.com or 509-747-1300.
Awesome. We'll see you next month.